So, a lot to get into in this one here today, ladies and gentlemen. My Mag 4. What is my Mag 4? It is Meta stock. It is AMD. It is Amazings on Amazon. And it is Palantir. Palantir is crazy because that stock, I have sold like by far and away the majority of my shares, and it's still somehow the fourth biggest position in the public count, which is just ridiculous. And thinking about it now, if I still had all of my Palantir shares, and I didn't take all, because I've sold so many shares this year, if I didn't sell any, Palantir would be close. You know what? No, I think Palantir would actually be the biggest position in the public account right now, which is crazy to think. But yeah, we've always taken a lot of profits, but that one's been insane, right? Now, listen, in regards to this, AMD and Amazon, I've got in Meta, let's talk about these three specifically. Listen, in regards to Amazon is a stock I would love to continue to build into a much bigger position than it is right now. Right now, that position size is $379,000. I would love to get it well over $500,000 in regards to Amazon stock here. And the reason being is, everybody's so focused on AWS and how that growth is just accelerated and the AI opportunity there for Amazon over the next 5, 10, 15 years. That's phenomenal. Great. No one is paying attention to the e-commerce business right now. When they have flipped that business into profitability territory, international, and they continue to build that business in North America as well. And I think everybody's losing sight that Amazon's about to push into a massive industry that is going to take Amazon from a service that people, when it comes to e-commerce size, from a service that people are used to using maybe once a week or maybe once or twice a month, into a service that they are consistently using likely multiple times a week. And you know what they're pushing into hard? Grocery. No one's talking about this yet, like in any substantial way, but they're pushing hard into grocery. And I think this is going to be a huge thing for them over the next 5 years. It's been a matter of time before they go hard on grocery. And it seems like we're finally getting to that place. And so I'm expecting their grocery business to absolutely boom over the next 3 to 5 years. That's going to create a bad dynamic for the grocery stores because this will take market share away from the grocery stores. Because Amazon, understand, they have these massive other profitable businesses. They'll be able to undercut competition. Like if they want to undercut Kroger's pricing, they could do that easily. Walmart, who do you want to pay? They'll undercut everybody. You know why? Because those other companies, they can't afford to basically go down to whatever Amazon's charging. So if Amazon wants to way undercut the whole grocery industry, they can do that. And so just understand, Amazon's about to become a much stickier app than we've ever seen in any point in its history because, it's one thing for somebody to say, I need to order, a raft for my pool. Let me go to Amazon to order that, right? And they, order something on Amazon every 2-4 weeks. It's another thing if they're used to getting their groceries there. Then they're going on Amazon all the time. And then Amazon has way more opportunities to, guess what? Sell you more things. This is serious. No one's talking about this. And I'm like, guys, this is like the next big thing for Amazon. Everybody's so tied up into AWS and all that. And I'm like, okay, there's other business people should be paying attention to. AMD. So when it comes to AMD, here's the deal. I posted this on X here today. Not sure if you guys follow me on X. I'll have that linked as the pinned, or not the pinned comment. The pinned comment today will be if you're looking to apply to our private stock group. Keep in mind, we're closing that to new members in December. So if you want to join my private stock group, you should get in there ASAP. That will be the pinned comment down there. Access to all my course curriculums, teaching you everything I got up here, access to the Discord chat, the moves I'm making each week, all that good stuff, pinned comment. Down there. So also in the description area, I always have my X link down there. And I said there's 35 trading days left in 2025. AMD 300 is possible if the market keeps its cool. And yeah, I gotta say, ladies and gentlemen, I really do think AMD has a potential to get to 300. But the market can't go down a bunch. Like if the market, if let's say between now and year end, the market dropped 10% like that, good luck to AMD getting to 300. That's just like put it like this. It's like swimming against the ocean and the waves are like coming straight against you, right? Yeah, it's possible, but it's not going to be too dang easy when you got massive waves coming at you and you're trying to swim against those waves, right? And so if the market can just be like flat or even uptrend between now and year end, I would not be shocked at all if AMD gets to 300 plus. I don't know if you guys heard the growth rates Lisa Su was talking about in regards to the investor presentation and whatnot, right? And I posted this. So Lisa Su's talking about 35% CAGR for the next 3 to 5 years when it comes to revenue, right? Now, we know Lisa Su likely sandbags. So I just ran some math here. I said AMD should get to $150 billion in revenue in the next 5 years. AMD should get to $50 billion of net income in the next 5 years. At a 20p, that's a $1 trillion market cap. For AMD at a 30p, that's a $1.5 trillion market cap. AMD's market cap currently, that was as of yesterday, $386 billion. AMD has serious 3x to 4x potential over the next 5 years. Now you might say, okay, what if they only get to $120 billion of revenue, which would be $30 billion shy? That's a big number, right? Even then, you could still make an argument that they might be able to get to $50 billion in net income because their margins are going to increase so dramatically over the next few years. But then you can say, okay, maybe $40 billion, do your math, still AMD's a banger stock, even under that sort of scenario, right? You could also say, what if Lisa Su's sandbagging a bit here and AMD actually gets to $200 billion of revenue over the next 5 years or whatever? Like, that's something you have to consider as well. So whichever way you want to look at it, like, AMD's still a huge buy even after this massive run, and we've done phenomenal in the stock. Now up 376,000 the public count. I have a massive position in one of my private portfolios as well, and it has more upside ahead, man. More upside ahead in regards to that one. Meta's a sticky situation right now. Meta's a sticky situation. The revenue growth is insane at Meta. 26% in the latest quarter. Who's doing that in Mag 7 other than NVIDIA? No one. Great numbers. Meta's going to keep putting up great numbers, right? But Zuckerberg has really increased that spend. People are worried that he's going off the rails again. It won't be the first time. And that is causing a concern around Meta stock, the return on investment, and they're having to face a lot of tough questions that Zuckerberg doesn't have the answer to right now. I listened to that conference call at Meta, right? There were some questions he got asked about what margins will be looking like for some of these businesses and how big they could be and things like that, and he didn't have great answers. And that's kind of what you would expect, though, unfortunately, out of an innovator like that, right? You're trying to build new businesses and do new things and do big things. Like, Zuckerberg's just focused on, like, we're going to build something massive here. My focus as a long-term investor is not getting caught up in the short-term spend. I trust Zuckerberg. He built Facebook. He acquired Instagram for $1 billion, one of the best acquisitions in business history. He acquired WhatsApp for $19 billion, a steal deal, right? He's building out Threads right now. He's been able to successfully copy so many competitors' features, whether it be Snapchat and, caused a lot of problems there, TikTok. Like, they just got it over there. And so I understand there's a lot of questions about the spend, but also look at the revenue growth you're getting at this company. What if Meta's going to get, we don't know where Meta's revenue growth is going to stop at in terms of the acceleration. What if they get to 30% revenue growth, and what if they keep that? Has anybody considered that? Like, these are things to also consider in regards to Meta. So Meta remains a buy. It's a steal deal buy. Is the stock price going to go up in the next 6 to 9 months? I don't know. Like, would I be shocked if Meta stock was still $600 6 to 9 months from now? I wouldn't be shocked, because at the end of the day, like, if the big money Wall Streeters are confused about the spend, they won't buy the stock. And if they don't buy the stock can't go up. It's as simple as that, right? If the Wall Streeters can get a little more clarity, let's say Meta comes in with another great revenue growth the next quarter, and Wall Streeters start to understand a little bit more about the spend and what's going on there, Meta will explode to new all-time highs, and next thing you know, you'll see the stock at 800, 900. I do think Meta stock next year will be $1,000 at some point in time. So that is my belief. Just in the past week, we have received over 500 applications to join the Prep Stock Group. That's unbelievable. I'm super happy everybody's taking investing serious or starting to take it serious and being like, hey, you know what, let me get up to a higher level. Let me get access to all Jeremy's course curriculums and things like that, right? I'm likely going to close my private stock group to new members, likely I would say in the next 30 to 45 days. And the reason being is it's just been overwhelming demand. Like, we're not used to 500 applications, like, an average week, maybe 100 applications. And I have a very small team, so we can't keep like this massive influx. So if you want to join us in the private group before I close that down to new members, pinned comment down there here today. Click on that, fill out a form, see if we can get you access in there. It's mayhem. It's mayhem in regards to that right now. It's insane, right? And then as far as when I would open it back up to new members, I would say at some point in 2026. When you join us in there, we'll send you your Steel membership cards, private group card, 1000X card, and if you join us on a lifetime basis, your lifetime access card. Ooh, I can't even show you that one. That was just too Too beautiful. Okay. Metastock, next up here. Metastock is being a lagger. Like, this stock didn't even keep up with the NASDAQ today, up 1.6%, right? So Metastock has suddenly turned into a lagger, a dud of big tech, right? When it was one of the best performers, like the stock was a beast. So what is going on here with Meta? Okay. Here's what's going on with Meta. People are very fearful of the spend. Zuckerberg's going crazy with the spend again, and investors are getting scared. And for good reason. Remember, the last time Zuckerberg went crazy with the spend was back in, end of 2021 into 2022, and we saw what happened with Metastock. Metastock went from a $300-something stock to $88. So naturally, people are going to get very scared when all of a sudden Zuckerberg goes too aggressive with the spend. So they're already pushing back big on this and like, Zuck, chill, dude. You're spending out of control, right? And so Zuckerberg is going to have to keep those expenses in 26 somewhat in line with revenue. Like, let's say revenue goes up 25% in 2026, okay? Expenses need to go up 25% or less, basically. They can't outweigh. If expenses in 2026 are up 40% and revenue's up 25%, it's going to be hard to get Metastock up. It's going to be very, very difficult because people are not going to like that. They're going to push back, and by pushing back, they sell the stock or they just refuse to buy it, right? Now, with that being said, here are my numbers in regards to Meta. Keep in mind, revenue in the latest quarter, they grew revenue 26%. So even under my bull case, I have a serious step down in revenue growth rates. I have them only doing 20% a year revenue growth and then 22% net income growth per year, okay? If they have a 20% top line, 22% bottom line, 35 to 45 PE would be fair for the stock. So we're talking about a compound annual growth rate in the 30s, okay? My base case, this is what I'm expecting from Meta. I'm expecting 15% revenue growth per year. Keep in mind, ladies and gentlemen, that's a mile and a half away. We're talking 1,100 basis points away from where that company's been growing. They've been growing revenue 26% in the latest quarter. I have been going all the way down 15% on average per year. 18% net income growth on average, okay? 29 to 34 PE. We're talking about, I get a CAGR in the stock in the 20s. Meta's a buy today. It's an easy money buy, right? Even my bear case has them doing only revenue growth at 10%. The company's growing revenue 26%. So to go down to 10% would be a disaster. And then no lift in the net income. So 10% net income growth, 23 to 28 PE. I still get a CAGR that's probably going to beat the S&P 500 over the next 4 years. So my bear case, I still beat the S&P 500 likely. My base case is amazing, 20% plus CAGR in the stock. And then the bull case, if that plays out, we're talking about a 30% plus CAGR. We knocked it out of the ballpark. So the bottom line is Metastock is a buy right now, today, right now, ladies and gentlemen, okay? Now, in regards to Cheesecake Factory, what's the deal with cake? Oh, okay. I'll show you what the deal is with cake, okay? This industry is just bad this year, man. Bad. So this is a year to date for these stocks. Sweet Green year to date is down 83%. 83%. Cava's down. Cava is down 56% this year. Chipotle has basically been cut in half this year, down about 50%. Starbucks is down 8% this year, and Cake's down 5%. No one wants to own anything in the restaurant, food space this year. It's just the way it is. DRI. Darden's a big restaurant player, owns Olive Garden, and a bunch of other big brands, Yard House, blah, blah, blah. And Darden has underperformed Cake this year. Darden Restaurants is down about 7%. Let's pull up, in my opinion, arguably the most well-run restaurant chain in all of America, Texas Roadhouse. They might even beat Cake, and that's a hard thing to do. And Texas Roadhouse down, 10.7% this year. So the bottom line is, folks, this industry just sucks in 2025. It is what it is. Some years you're going to, have some stocks in industry and there's just no momentum. So Cake has such an amazing next 5 to 10 years ahead, right? With the Flower Child expansion, with the North Italia expansion, they got an ATM business model in the Cheesecake Factory, and they got a bunch of concepts they're growing. But with that being said, and it trades at like a 12 forward P or something just silly. But at the end of the day, no one wants to own these stocks in the space. And if no one wants to own it, what are you going to do? Like, you know what I mean? Like, if it's just, the good thing for the Cake, and this proves how great the Cake's business model is Cake is outperforming these other companies. It's done the least bad of Darden, Starbucks, Texas Roadhouse, Chipotle, Cava, and Sweet Green, which means it's seen as defensive also. if you're going to think about like who's defensive in the space, it's actually Cake. So Cake has that amazing offense the next 5-10 years with all the locations they're going to be able to expand into for Flower Child, North Tally, and other concepts. But they also are giving you great defense. Like you could have been in Cake down 5% this year. You could have been in Sweet Green down 83%. Like Sweet Green might never get back to the price it was at the beginning of this year. And if it does, it's going to take years to get back there. You could be in Chipotle stock down 50% this year versus Cake down 5%, right? So the bottom line is Cake's set up amazing for the long term. It's just no one wants to own those stocks right now. Nike, when does this stock go up? Listen, it is clear as day Nike's business model has turned. The numbers are proof of that, right? But with that being said, if you're thinking about a stock that's a big, remember, Nike's a big market cap, right? If you're thinking about a company that, who do you want to tax loss harvest with, right? Nike's coming to mind. Like Nike's coming to mind because a lot of people are thinking like Nike stock's not going to move up in any substantial way between now and year end. And they're like, I'm sitting on a bunch of gains. And so why not go ahead and sell off Nike? So even though that company has turned the corner with their business model, everything's headed in the right direction, the stock isn't, because that's facing tax loss harvesting at the end of this year. And so it is what it is, man. It is, it is what it is. It doesn't matter what their numbers are right now. Like people just are kind of look at that and they're like, wait, I'm down a bunch on this. I sold a bunch of profits in these other stocks. Sell Nike. We'll buy it back in the first quarter next year. So that's what's going on with the stock like Nike. Palantir, Elf, SoFi, Celsius. Why these stocks go so insane? Like why they got to be so drama? You know what I mean? Like why? Why? Like it's just insane, the moves in these stocks, right? Remember, who's in a lot of these type of stocks? You're going to have people like myself that are long-term investors that love growth stocks, right? And if you know what I preach what? GVD. Growth stocks, value stocks, dividend stocks. The three, right? GVD. When it comes to those stocks, they not only attract people like myself that are looking to be in those stocks for years, they also attract, you know who else? A lot of traders that are in and out of these stocks. Traders can be risk on one day and the next day they wake up and they're risk off, okay? They're in, they're out, they're all over the place. And so if all of a sudden you get a big risk on day, suddenly all these traders are jumping right in, stock goes up 8%. And if all of a sudden tomorrow everybody wants to go risk off, stock will go down 8%, 9%, 10%, 12%, like who knows? Remember that a lot of times the moves on the downside are even much more extreme. And so that's what's going on with those stocks. And remember also a lot of people that buy those stocks will do it on margin as well because they already have a bigger risk tolerance being in those sorts of stocks. So they'll play them with margin as well. And then also the markets get shaky and either they get margin called so they have to get out or they just don't feel comfortable being in those stocks. And that's what ends up happening, ladies and gentlemen. So yeah, that's why those stocks are so drama. It's ridiculous, okay? Next up here, Duolingo, Robinhood, these two stocks. So Duolingo, A+ income statement here, beast numbers out of this company. Look at their net income. I mean, of course, their net income was helped by this one-off here, so do keep that in mind. But if you look at their income before income taxes, it almost doubled year over year. Went from 25 mil to 46 mil. Very impressive. If you look at their gross profit, it went to $196 million from $140 million. Like A+ income statement from Duolingo, phenomenal. What's the issue with Duolingo? Well, the issue with Duolingo is there's a lot of fear about Duolingo being somewhat of a fad product, right? It's blown up to be super popular over the last few years, but there's fear that it could be a fad product like GoPro was back in the day, like Fitbit was, and countless other things, and Beanie Babies and all those things, right? And they come and they go. And just like a lot of video games have been over time, right? Like a lot of mobile games like Clash of Clans was so popular. It's not nearly as popular nowadays, right? And it seemed like everybody was playing with Clash of Clans back then. And now it's not really like that, right? Candy Crush, Soda, Candy Crush, Soda Saga, all those games were so massive, right? And then they weren't anymore. And so you look at something like Duolingo, and we see that maybe that's going to be a similar situation where, yeah, it's been insane and it's so cool and people want to do it, but ultimately at the end of the day, they're not going to want to do it, right? And so that's just something to keep in mind there. The good thing I think for Duolingo that's better than any business model in the past is really around the subscription service, right? If you think about Candy Crush, if you think about Clash of Clans, GoPro, Fitbit, they were relying on a lot of one-time purchases. Duolingo is more of a subscription, right? So even if people aren't using it, they might stay subscribed to it so that the melt in the business model might be much slower than other ones, right? So this is kind of what's going on with Duolingo. The other one issue you have with Duolingo is, let me show you guys something very important here with Duo. And this is even despite the stock crashing. And remember, I used to have a put position on Duolingo. I did phenomenal in it. I think I made like 50+% in a quick amount of time. It was amazing, right? Oh, dang. Duolingo's PE's come down so much. Like the last time I looked at Duolingo, like back when I was buying puts on the stock, the PEs were like really, really elevated. And I guess they're not anymore in regards to Duolingo. So I guess I can't even say that anymore, right? So, I mean, with Duolingo, the thing is, I wouldn't trust betting against a stock in 2026 or beyond. I just wouldn't, right? You know, also, it's not a stock I really want to bet on either, but I think the big money betting on the downside, I think it was to be made this year in 2025. So if you bet against Duolingo this year, you should have made crazy money on that. Good for you. I don't think there's easy big money to be made on Duolingo in 2026 betting against it, right? So I just wouldn't feel comfortable betting against Duolingo in 2026. I just wouldn't. It's not, 2025 was a year you could have made bank. 2026 you're pressing your luck, in my opinion. Now the Robinhood, so phenomenal. The Robinhood turnaround's historic. Like, it's unbelievable the way this company's turned around their income statement in the past 3 years. It was dumpster fire trash, like F grade level income statements like 3 years ago or so. It is not like that anymore. It's A pluses. And look at total net revenues up, basically doubled up year over year. Incredible. Total operating expenses was up 31%, but that's nothing compared to how much their revenues are up. Net income was up 271% to 556 mil. Diluted EPS 61 cents. Okay, so what's the issue with the hood? Okay, the hood, in my opinion, has two issues. One, the PEs. I don't care if you're looking at a trailing 12-month PE, forward PE, or 2-year forward PE, they're very high, right? The other big issue the hood has here, and why I'm not buying it despite it having an amazing income statement and balance sheet, the reason I wouldn't step in hood right now is you got to understand we've been in a 3-year massive epic bull market. Massive epic bull market for stocks and for Ethereum and for Bitcoin, okay? All three. Guess how Robinhood makes its money, okay? I don't think it's rocket science to, know how they make their money. Look at where their big money comes from, right? Net interest revenues certainly is a big number for them, but transaction-based revenues is the big one, right? Transaction-based revenues, 730 mil from 129, up 129% year over year. The business has been on fire. The issue is, at some point in time, this bull market will come to an end, right? I don't know when it is. It could be next year, it could be the year after, it could be the year after, it could be the year after. At some point, it's gonna come to an end, right? Robinhood's revenues in that environment are going to go down substantially, right? So then you're going to have a whole re-rating of the stock and you're going to have a nasty crash because here's the deal. Robinhood trades right now at very high P ratios. So once the revenue growth all of a sudden starts to collapse, right? The stock price is going to collapse twice as hard, essentially. And that'll not be a good thing, obviously, for Robinhood stock price. And so I wouldn't feel comfortable stepping on hood here. You usually want to step in on hood when you've gone through a big bear market. Because when you've gone through a big bear market, no one wants to own some company that makes a bunch of money off of Bitcoin, Ethereum trading, and stock trading, right? And options and all that sort of stuff, and margin. To buy now, where margin levels are pretty much at record highs, right? The stock market is right around a record high. Bitcoin's still quite a ways off of record high, but it just set record highs, a month ago or a few months ago? Ethereum, same exact thing. I think Ethereum set a new record high within the past month or so. So, the growth rates in 26 are going to get harder to push up. Like, they could still come in with nice revenue growth based upon anybody's standards, but it's not going to be like up 129% year over year type numbers, right? Doubling up the revenues. And so you'll have a slowing of the revenue growth rate in 26. And then if we ever got into like a bear market in 27 or something like that, then you could really talk about major problems for the revenues. And then you'd have a massive collapse in the stock. And when we're talking about a stock like Hood, just understand that stock could go down 50 to 80%. In 12 months. It's not like, it's just, it just goes down 10, 15%. It'll go down 50 to 80%, right? And so I'm just not willing to step in at this stage of the market. If we were in a different market, I would be like, dang, the company has its stuff together. how Hood handles the next bear market is going to be very important for the long-term trajectory of Hood stock. If we're talking about Hood eventually becoming a $300, $500 type stock, how they handle the next bear market is going to be really important whenever that next bear market is. If they handle that well, they're able to keep the business model very profitable and have revenues maybe go down a little bit, but not like plummet. Then we're talking about Hood in the next bull cycle could be a $300, $400, or $500 stock. Okay, so that's what's going on there. Hood's a very impressive company, man. They historic turnaround in regards to that. And it is a stock I'd be willing to own nowadays. I just don't want to buy it right now. But could I own Hood someday? Oh, I could absolutely own Hood someday, maybe.